gold call has delivered significant return in last 4 years. In silver, we became positive somewhere about 6 months ago, and silver thereafter has delivered fantastic return. Our call of buying gold as well as silver was purely on the basis of central bank buying. Between 2022, 23, 24, central banks bought almost 1,000 tons of gold. This is what India buys on a gross basis every year. In this quarter also, first and second quarter 2025, about 400 tons of gold has been bought, and it's quite likely that by the year end 2025, central bank buying will touch about 1,000 tons. The world is not producing enough gold to meet demand from Indian housewives and central bankers, and which is why gold prices have kept on moving up. If tomorrow central banks turn seller, undoubtedly gold prices will crash. But will they continue to buy or will they continue to sell is $1 million question. We believe central bankers will continue to diversify from euro, yen, GBP, dollar securities to gold based on what happened with Russian central bank. And as long as central banks continue to buy gold, gold prices should remain supported. There is also opportunity for investor buying coming into gold. In 2022, more than 150 tons came on a monthly basis in gold ETF. Thereafter, there was fair amount of liquidation, and now last 7-8 months, gold has started. Investor flows have started coming into gold ETF. Will this continue further? If yes, then that will have material impact on gold prices. The Chinese appetite for gold continues to remain strong. They have been buying gold to diversify their FX reserves. Despite fair amount of buying by China, their gold reserve is at about 2,300 ton. US is at about 8,100 ton. In every field, China would like to exceed US. Hopefully, they'll go and buy more gold to exceed US's gold reserve. The only risk to the gold prices, apart from central bank selling, is manufactured gold. Is it possible to grow gold in laboratory like lab-grown diamond? Well, in San Francisco, one startup has converted mercury to gold through nuclear fusion process. Earlier, nuclear fusion used to remain for few seconds, but in France, someone started nuclear fusion process for 22 minutes. So we'll have to keep on observing whether lab-grown gold is possible or not. In CERN, at Large Hadron Collider, they were able to convert lead into gold for a few nanoseconds. It was an unstable conversion, so gold disappeared. The cost was so prohibitive that this experience was never conducted again. So maybe lead to gold via CERN looks difficult, but we'll have to keep a watch on nuclear fusion evolvement, whereby mercury gets converted to gold. Silver is at about $47. It has gone up like a rocket, primarily driven by industrial demand as well as central bank demand. Over the cycles, silver prices have gone through ups and downs. Central banks have not been traditional buyer of silver, but of late we hear Saudi Arabian central banks have been buying silver. The industrial demand for silver continues to remain strong, especially from electric vehicles and solar cells. Put together, gold and silver are inherently risky instrument. Both have sharp run-up on the back of central bank buying. We believe there could be corrections in silver prices in the near term. But as long as central banks continue to buy gold and silver, prices will eventually go higher. Keeping that in mind, we are launching Kotak Gold Silver Passive Fund of Fund. The NFO opened yesterday. and it's closing on 20th of October. In this fund, we will be dividing our allocation between gold and silver based on past historical analysis. Gold and silver has low correlation with equity as well as vis-a-vis each other. Over a period of time, gold and silver both have delivered return in different cycle. There are periods where gold does well, there are periods where silver does well. If one changes from gold to silver in physical format, there is a tax liability, and which is why we are launching Kotak Gold Silver Passive Fund of Fund. This will allocate between gold ETF and silver ETF based on in-house quantitative model. The investments will be on a passive basis in Kotak Gold ETF and Kotak Silver ETF, and dynamic rebalancing will ensure that we are able to get best of the both world without paying taxes. Based on the past data analytics, Kotak Gold Silver Fund of Fund has outperformed both gold and silver by doing right allocation. Obviously, there is no guarantee that it will get repeated in future, but we'll continue to take advantage of analytics to ensure that we have better handle on the allocation between gold and silver. The best part of fund of fund will be tax efficiency. Every time you buy and sell gold, you incur transaction cost. Our transaction cost will be lower. You don't have to worry about purity and storage. And most importantly, there will be limited tax liability, as fund is not liable to pay tax for differential allocation.